Hello, everyone. It's Thursday. It's June 9th. It's 2016, and it is the Thursday Let's Talk About Robot Trading webinar. So glad to have you here. This is a pretty important topic to me, and I'm hoping it's interesting to you. But this is really gets to the crux of my trading and my education, whatever that means. Um, but we're going to, this particular week, check up on an old friend. And oh no, the power just went out. Oh no. Uh, Everyone's still there? Let me know if you can hear me. Oh no. You can still hear me? The power just went out here. You can still hear it. Wow. The lights just went out and it's perfectly sunny here. That is frightening. All right. Um, Interesting. Well, anyway, I'm gonna keep going. But here's why the topic is so important for me, and that is we're going to look at some data, and we're going to look at a portfolio that I looked at, or actually I created back in March 2014. Now, why is this so important? Well, with each passing day, which each month that goes by, I get more and more data. I get more and more feedback. I get more and more, I guess, proof, for lack of a better word. I get more proof that this is going to operate the way I want it to operate. Now, the example that, I don't teach tennis anymore, at least this part of my life, but when I started in tennis, when I had nothing, when I had no clients, when I had zero, I believed that I could coach as good or better than anyone else. I just believed that. And I believed that I had studied methods that worked, even though I was, in my early 20s. And I believed that what I said would work as well as anything that was said in the world. I just believed that because I had worked so hard at it and thought about it so deeply. But what proof did I have? What validation did I have to think that what I'm going to say is going to help people more than what someone else would say, especially someone who's been around the business or tennis business for 20 years or more? What what validated anything that came out of my mouth? Well, the answer was, of course, nothing. I had passion and I had facts and I had reasons and I had a lot of stuff. But what I didn't have was actual proof. So that's what this week is all about. We're going to look at a portfolio that I helped create for a client in March 2014. Now, it was pretty arbitrary, honestly, how this was set up. There wasn't really any method behind it. I had initially tested about 15 different robots. And when I was working with this particular client, again, this was very early on, actually when I just started getting into the education business, actually, which is right in that March, April, May 2014-ish. We looked at 15 and we just honestly said, well, these five look pretty good. We tried to maybe spread it out with different currency pairs and so forth, but honestly, there wasn't a whole lot of backing. I didn't have a whole lot of live trading or demo trading on this particular portfolio. I just didn't have a lot of reasons to pick one over the other, except for the fact that early on, I liked the number five. Maybe it's because maybe Warren Buffett said that in my research way long time ago, or maybe it was because IBD, Investors Business Daily, because I was a stock trader for 3 years when I started my career. Maybe that was the reason. I don't know what the reason was, but we settled on five as being the number. And as it turns out, I love the number five. It's a great number because it gives you enough diversification and it still is nice and concentrated so you get a decent return. So let's take a look at this particular portfolio. Now, this hasn't been touched really since March 2014. It hasn't been touched at all. What I've done is I've kept it on a separate little workspace in TradeStation, and I just watched it. And obviously, until February of 2016, this was perfectly fine because TradeStation worked and traded Forex then. But this particular portfolio was really, let's just scroll it back, was really, really untouched, unencumbered, I don't know, blasphemed, I don't know what the word is, but untouched at all by anything. I just watched it, right? Because I like to keep track of all the portfolios that anybody who ever wants to trade my robots, I like to keep track. And so this was really the first 5-member portfolio that I ever tracked. So that's why I was especially keen to keep my eye on this one. And you can see there it was starting in March 2014. You see it started off really nice, and that seems like that never happens, right? Anytime you start a trading robot or a trading system or a trading period, you never get wins right off the bat, right? But look, it won quite a bit. And then, of course, you had your first losing month in December 2014, and then it just went back and forth. The really bad month was August 2015, and there it is all the way up to current times by the end of May. I updated this at the end of May 2016. So let's take a look at the numbers and then I'll see if there are any questions. First of all, there's your total. That is total profits, okay? One thing to notice on this particular column is the huge mistake I made right at the beginning when I was looking at portfolios is I did not give any sort of credence to trade size. I just tested each individual robot for a particular trade size that gave me a drawdown I wanted. So for example, if I wanted a $2,000 drawdown on that particular robot, then I just messed around with the trade size and tried to get it to where it's 2,000. I thought that was a good idea. I've since realized very shortly, actually, I don't like that. What it does is it doesn't equally weight the portfolio. It means that one currency pair can dominate the portfolio. And if you're trading a portfolio, I've found with my personal experience is that it's best to just keep them all the same. So originally I had this set for a drawdown that was too high, so that immediately got switched. So all this is a little divisor. I take this, which is the original trade size when I set it up back a couple years ago, and then I just divided it up by 2. And what that did is it made them all the exact same weighting. Got that? So that's what that is. If you're curious, if you weren't curious, then I just wasted a few seconds of your life, so I apologize. So there's your total, and there it is per month. So since the outset of this particular portfolio, right, back in March 2014 to now, since then it's averaged $281 per month. Now this does not include compounding. My numbers never ever do. If you want to do a webinar on compounding, I'd be very, very happy to do that. In fact, that's a great idea. I think I will do that. But anyway, this is what it's made. If you just took the money out each month or left your hypothetical account at 10,000, that's what you would have made per month. And I also like to track recent times, past year or so. So that's what this number is here. Since 2015, it's averaged that. So it's pretty much the same, right? So what's interesting about this is 5 seems to work very, very well. It would have averaged about 2.8% per month on a $10,000 account. And that's really, for me, I don't know how you feel. Maybe that's not enough money for you, but that's a really nice number for me. It's actually what I look for. So what's interesting is that I just set this up way back and it's produced that. Now, again, this goes back to my point I made at the top. The longer this trades, the more it validates that my testing procedures or that short-term trading, day trading, can be very, very solid. I feel like we all should know by now that trend following works. I don't feel like I need to prove trend following anymore. I feel like it's been proven. But day trading strategies, I think, absolutely need to be proven and they need to be validated. Because when you trade during the day trading, when you trade during the day, I just feel like it's so arbitrary. If news comes in the middle of the day, or if something just, some sort of a sudden news event, or of course you have Brexit coming up at the end of the month, stuff like that, or interest rate decisions, I feel like in the middle of a day trade, it can be affected. If you're trend following, I mean, if you're in the middle of a trade and Brexit happens, I mean, maybe it comes, stops you out, maybe it doesn't. Like, I really wouldn't be afraid of Brexit if I were a trend follower. But, and we'll talk about that as we get closer to June 23rd, 24th. But I just feel like day trading strategies are more susceptible to things. So that's why I would love to see live or even demo or / live, any sort of actual trading where no one is going in and changing or fudging the numbers or doing anything untoward. I like to see this just keep racking up months after month after month after month. And you can see that in the recent months, it's averaged this. In the last 27 months, it's averaged that. So it's holding up. It's holding up super nicely. And I'm really, really pleased about that because that's what I expected it to do, right? That is almost exactly in line when I started this back in March 2014, that's what I expected, right? And it's performed that way. And do you know how fun that is, right? It's, I don't know if it's validation, but it's just confidence building. That's why it's so important. It's like when my first student went out and won a bunch of tournaments, which she did. It was very validating. You know, when you see it happen in real life, what you expect, it's quite a fun thing. So revisiting this old friend is quite fun. And again, I update this every month and I check in with it from time to time and so forth. So I'm going to take a second. I've got something else, though, that you may be wondering about. But the power did go out again, by the way. So I'm wondering if anyone is still there. So let's go back to the questions real quick. Give me a yes or a no if you can still hear me, if anybody's still out there. Hey, Talon's still here. Yes. What's interesting is the entire house is dark. How in the heck am I still here with you? Isn't that weird? Hey, Jim, how are you? All right, good. And any questions so far? Everything seemed pretty easy, right? And by the way, yeah, how are you connected? I'm not sure. Wirelessly. So maybe the internet's up, but the electricity is off. I'm not sure, actually. It's pretty interesting. But one question I do want to ask before I go on to the next part of the presentation or the webinar today, are my spreadsheets clear? Like, is there anything unclear? Obviously, I've been looking at these for years, and they're super clear to me. But is there anything weird about the spreadsheet? If there's nothing, you don't have to say anything. But is it pretty easy? You can follow which currency pair is which. If it has a blank, it means it didn't trade that month. I have the totals at the top. I have the averages. Let me know if there's a problem and ask me a question right now, and I'll pause and see if anybody can follow or can't follow. All right, everything pretty clear? I don't see anything. Excellent. All right, so let's go back to the presentation, and let's talk about this for a second, though. All right, so there's your $281 per month and a $10,000 account and so forth, all right? It's funny, and I put this on the slide, is that I can't even believe how much I've learned since 2014. I can't even believe it. The amount of hours I've spent since 2014 is staggering. You know, how many hours have I spent in the last, I don't know, days? I mean, 5 to 7 to 8 hours a day just looking at my little computer. So add that up over 360, you know. But it's so funny that even though I've learned so much, sometimes it's better not to learn anything at all. I mean, this is something, I did that portfolio without knowing anything really, or at least not having any live trading to speak of. I just feel like that's very interesting that the first portfolio I put together really is performing the way I expected. I think that's kind of interesting. But here's the question that may or may not be on your mind, and that is, let's go back to the portfolio. The pound Swiss, right? I do not trade the pound Swiss live right now. Why? It's the first 4 trades I took on the pound Swiss and MT4 were crazy spreads. They were not the same results. And as I've mentioned, my results are pretty identical so far. Again, we'll see. We'll be watching it closely. But my results have been pretty identical for everything else but the pound Swiss, so I don't trade it. So that being said, when the TradeStation debacle of 2016 hit at the end of February, early March, maybe I couldn't trade this anymore, or maybe I would have put this in and then saw the spreads are too big and then not traded it at all. And as you can see, that maybe that's a good thing, right? And of course, that's total arbitrary luck that it went in a downturn right at the point where TradeStation went out. I mean, there is no correlation there whatsoever. But I really can't track this portfolio anymore accurately from this point on because I don't personally trade the pound Swiss. So what do you do about that? Well, you could really pop in anything else. There's a couple things you could do. You could just trade these 4 going forward, and that would still be a decent return. Or you could just pop one in. And I popped this one in, the dollar Swiss Friday, not because it's the most successful, but because it is a Swiss pair, right? So that's comparable. And honestly, it doesn't trade that much. In the long run, the dollar Swiss made less than the pound Swiss 14-minute chart. So I picked one that ideally would make the portfolio go down. And actually it didn't. So I could have popped another one in, but I just left it because it's a Friday only, because this is one that I do trade live currently. So let's say at this point, I switched it out. Well, you can see that it would have done even a little bit better. But these numbers over here, just for fun's sake, is if I never would have used this at all. And I told you, when I picked this portfolio, it was pretty much arbitrary, right? We just picked 1, 2, 3, 4, 5. based on, well, let's see if we can mix it up. Right? You can see we had a pound and a pound, but we had a dollar and a Swiss. Okay, so that's different. We had a pound and a euro dollar, and these are kind of, right? But we have the Aussie yen, which is not related to anything. Then we have the dollar yen, which is kind of that too, but these two trade entirely different. These are like two different animals completely, right? So, a part of me, when the client chose these five and I agreed, I mean, we had a decent cross section. We have a Swiss, we have an Aussie yen, we have a dollar yen, different animals. These two are the same, yes, but I thought it's a reasonable cross section. But what if I just not picked that one at all? What if I had picked the dollar Swiss? Well, here are your totals over here. If you got rid of the pound Swiss and arbitrarily, just randomly, I would have picked the dollar Swiss Friday only. And you can see the numbers go up. The profit goes way, way up. The numbers since 2015 have gotten better, and it went from 281 to 310 a month. Now, that's better, obviously, so I cherry-picked an example, which I didn't mean to. I just picked the Swiss, and then it turned out better, and I just thought, well, I'll leave it. If you'd like me to plug in one that does worse, I'd be happy to do that for you. I don't mean to upgrade the results, but the point of this is that when you add that fifth one arbitrarily, it actually went up. So you can see that there really isn't a lot of skill in picking the particular five. As long as you have five robots that are reasonably tested, that seem to perform, that you didn't pick the best results and didn't pick the worst results, but tried to pick results that kept you in the middle, results that will keep you going through thick and through thin, you can see that really no matter what you pick for that fifth robot, the results are pretty much the same. In fact, you could pick one that does even better. And you could have picked this originally and gone back to this, and you can blah, blah, blah. Point is, when you pick that fifth one, or when you have five in general, five is a really nice number, right? Isn't that weird? I've said it over and over again, but when you put five together, it seems to work. Now, one other point I want to make before we move on. You can see in this five, right, take the dollar Swiss out of this, okay? Look at the euro dollar in the 27 months we've traded it. It's about break even, right? So one of my five, this is kind of important, one of my five doesn't make money. Oh, and by the way, the pound Swiss doesn't make money either. Now, up until this point it did, right? If you just total up these, it made $195. So actually it was profitable until 4 and 5 of 2016. So that's not entirely fair. But you have a 5 robot portfolio and 2 of the 5 are not profitable. Whoa, right? Think about that. 40% of your portfolio is garbage. But look at the pound dollar, look at the Aussie dollar, and then of course the dollar yen, which has been the absolute superstar. Now, going forward, what would you expect? Well, I would expect the dollar yen to calm down a little bit, although I do love this currency pair for the style of trading that I do, day trading. I fully expect the Aussie yen, right? The Aussie yen was doing great right up until recently. Look at the total there, $786, so it's had 3 losing months. Pound dollar is just pretty solid, right? It's been kind of shaky lately, but it's been pretty good. But you can see that the power of having 5, I would expect this to do better, this to do worse, this to do better, this to do better, and this to do better. Or if you did this one, this to do better. That's why 5 seems to be a nice number. If you traded just 2 of them, well, what if you pick these 2? That's not good, right? You can make money trading 2, but you can see that concentrates you a little bit. If you paid these 2 or even these 2, not as great. So you can see 3, well, I would have made a little bit of money, and so forth. 5 seems to be a really nice number because even if a couple underperform or go through a bad spell, you can still get a nice monthly return. All right, back to the slides. All right. Now, I want to now compare that to my current spreadsheet in the current portfolio that I've been trading. And again, I'm back up live this week. Let's take a look and see how that compares. Now, I said I've learned a lot since then. Well, prove it. Let's find out if I've made any progress. Well, right now, here's the original 5 we just talked about. Right now, I'm trading 11. I do not trade the pound Swiss. I was trading 12 until TradeStation come along. You can see I'm not updating this anymore because I'm not trading it. All right, let's take a look at the numbers. Well, the numbers per month are 306, very comparable to 281. So I've added, what, 5 different robots? 6, 11 minus 5 is 6. 6 more robots to the diversification portfolio, or to get diversification in the portfolio, and it makes a little bit more money. However, since 2015, it's doing not as well. Whoa, so what have I learned? Learned maybe that I'm stupid? No, I've learned that it just depends, right? If you have 5, they're more concentrated, and you go through a good stretch, clearly a 5 portfolio is going to outperform an 11 if everything's rolling on all cylinders. I don't even know what all cylinders mean, but I thought I'd throw that cliche in there. But a 5 robot portfolio can do very, very well if it goes through a good stage. And obviously 2015 for the 5 member portfolio did very, very well. But here's the thing, though, between these two. Before you immediately think, oh, hey, I like 5 better, you need to keep this in mind, obviously, if we're going apples to apples. And that is, let's now check the biggest drawdown. And this is the key thing in any portfolio or any robot or any trading system. You have to find your max drawdown, all right? So let's go down to my current spreadsheet and the current portfolio that I trade. And there it is. There was one bad losing month for the 11-member portfolio, and it occurred on February 1st, 2009. So that's been a while ago. It's been pretty good since, but that was an $800. So the worst monthly drawdown is $804. Okay, let's go back to the original 5, $1,300. That's more, right? So we're getting the same amount of numbers, actually a little bit less, right? This is beating the 11-member portfolio, 264 to like 235, right? However, what kind of drawdown are you willing to stomach? Well, this is a $1,300 winning month, which means during the month it might have been worse than that, and it probably was worse than that. So maybe it was $1,500 or something in the middle of the month, or even more, and then you got a couple winning trades at the end of the month, and it finished out at negative $1,300. But this is the worst monthly drawdown that we've had to take on for the 5-member portfolio, and again, 800. So now what does that mean? Well, if you happen to be comfortable with a $1,300 drawdown and you wanted to raise the betting, so these all trade roughly the same amount, right? About 1 mini lot-ish for a hypothetical $10,000 account. If you wanted to get this portfolio up to a $1,300 drawdown, you'd have to multiply everything by 1.6, right? So if I did apples to apples and I bet this portfolio trying to recreate the same amount of drawdown, it would be that, which is clearly more money. So if instead of an $800 drawdown, I made this portfolio have a $1,300 drawdown, all the betting sizes would have been raised slightly, and this would have been your number. So is it better to trade 5 or is it better to trade 11? It would seem, again, you can decide, it would seem that trading 11 is better, which is why I do it. However, there's one final thing to keep in the back of your head, is that 11 robots, especially for someone who's new to robots, is a ton to handle. It is a ton, all right? And honestly, the first time I tried to do over 10, it blew me away and I stopped. I stopped within a month or two. Couldn't take it. I couldn't take the endless cavalcade of trades coming at me, right? Trade, and so forth. There is something to be said for trading a 5-member portfolio because it's really, really easy to keep track of 5 charts. And it's not that easy at first. Now, once you're experienced, it's fine. Furthermore, I was talking to someone this morning, I won't say his name, but you know who you are, that a lot of FXCM, for example, VPS people will do 5 charts for free and will do more charts for not free, right? So that is something to consider too. Not only is a 5-member portfolio easier to take care of and manage, but it also might get you your VPS for free. So that's also worth considering, right? But if we're talking strictly a number sense, trading a diversified portfolio and keeping the drawdowns the same, trading a diversified probably will make you more money in the long run. But guess what? It doesn't mean anything if you can't manage it or you're intimidated by it. All right. So the bottom line is, sometimes your first idea is your best idea, right? All the stuff that I've learned, honestly, that portfolio has performed just fine. So maybe you're smarter as you go, or maybe you just get a little more information and you should just build on the foundation of what you originally thought. That was a really good portfolio that got put together. And even though I'm smarter now, it's not that easy to do better, right? It's not that easy to do better. But even more importantly, perhaps, don't throw away your old research. Keep your old trading systems, keep your old notes. Please don't throw them away. Go back to them. You'd be surprised that you go back and it's like, wow, that was a pretty good idea. Why did I even go off of that? That happens to me. It's happened to me many, many times. So, and of course, I try to keep track of everything to go back. Right. So, don't throw away your best stuff or your old stuff. It might be your best stuff. And additionally, the power of the portfolio. Right. And we talked about it. You can have one or two members of your portfolio do poorly and you're still making money. If you're trading just one, then all your eggs are in that basket and you may fail if that fails. So that is why I love portfolios, whether it's 5 or otherwise. Let's go through quickly through the updates. I did this on my blog post yesterday, and then take any questions, and then we'll get out of here and I can run around in the dark for a while. I am in South Carolina if you haven't gotten that part yet. Still there. It's great. Having a good time. I'm live on MT4. I've got 2 accounts running now. I've got 1 full portfolio and 1 partial portfolio. I just want to see 1 or 2 more trades to make sure 2 accounts running simultaneously works out fine. So that's why I'm being cautious, but I do have 1 full portfolio. I got that up and running today. As I mentioned yesterday, looking at multi-charts again, but I will probably only do that if they can do VPS. But one thing I do want to say, and I've already talked to a few lifetime members, and everyone else, I'm sorry to exclude you for a minute, but if you're a lifetime member and you want to be on a separate email list, I'm making an email list for lifetime members. Just email me. I don't want to send you stuff that you don't want, but if you're interested in just getting, you'll get the updates quicker, and maybe like, I'm not going to email an entire group or do a webinar on, oh, change your settings to blank, right? I would just email you saying, or I'm adding a robot to blank. That's not interesting to everyone. It's only interesting to the people who are lifetime members. So I am setting up a separate email list for lifetime members. If you're interested, just email me and I'll put you right on it. I've already got a handful of people on it already. So check email, Twitter, blog posts, and so forth for the latest updates. And there's a contact information. As always, my email only has 1 T. Hopefully you're still there, and I'll see if you have any questions. Scrolling back. Still here. Good. How you promo for every 5K. Who said this to me? All right. Promo at FXCM. For every 5K in an account gets you a free VPS as long as there are 5K in the account. It's awesome. That does sound awesome, by the way. All right. Yeah, I'm Oanda, and I'm very happy, but I've been talking to some FXCM people, and there's some pluses over there. There's no doubt about it. All right, everyone. I hope you heard this. I'm sitting here in the dark, but it's been great being with you as always. Email me with questions. Check Twitter. This will go up on the blog and on YouTube, so the recordings will be available for you later today. I will see you next week. Bye for now.